Welcome to Profiletraders. This is Reza and you're listening to my market analysis for March the 10th. All I can tell you is that it's been several sessions where the market is in an absolute, complete, total destruction mode of day traders. It has been a horror show. As you can see, 1, 2, 3, 4, 5, 6, 7, 8 sessions lined up one into each other, churning, chopping, whipping, doing all kind of mumbo jumbo. It has been horrific. And then finally today we heard that the crook from Europe, Mr. Draghi, came out with more injection of capital into the casino under the rules of making their interest rates go negative, forcing people to pay money to the bank to park their cash in there, and encouraging everybody to take their savings and forcing them into the stock market. Despite that, there was a bit of a euphoric move to 2000 in the overnight, which was very much so rejected down with a close at 85 in the overnight. And once we opened, tested 95 to 2000, we got a very severe reversal with a full-blown collapse to 1957, which from that top to the bottom, it was a 43 points drop. Then finally, of course, towards the end of the day, the usual crap, they came in, bought it, and then we closed towards the middle of the range. So if we look at the daily chart, today was very much so a washout. Neither the buyer won nor the seller, as you can see with this candle, with having an equal amount of rejection above and an equal amount of rejection below. I am a strong believer that we are heading towards a full-blown catastrophic event for these markets. I have never seen a group of central bankers this desperate, this out of control, with trying everything, every trick that they have into their sleeves in order to avoid a market drop. They are running out of capital. Now they are stealing the savers' money. They are stealing people that are saving money by paying them negative rates, forcing that money into the market. I know it with certainty. It will end very, very, very bad. And if you do not believe me how things are out of control, let me show you a chart of euro. Everybody was expecting that after today's announcement, euro would collapse. Look at what it did. This is one of the strongest moves I have ever experienced in my career in one day. From 1.085 to 1.12. Something is not acting right, and I believe that central banks are playing with fire, a fire that they do not know how to contain, and they are about to create massive dislocations in various markets, which in my opinion will impact the stock market as well very, very negatively. So from these levels on, I am personally very cautious, very, very careful with the upside. We have a 200 points rally that has not been corrected at all. And now that this European central banker pulled out the rabbit out of his sleeve this morning and could not see any upside result from this market, we could start to see a very significant correction coming in, especially now that there are very strong talk that the Federal Reserve will be raising rates either in April or sometime in June, but they are expecting 2 more rate hikes going forward. And please understand that these are rate hikes not because economy is good, not because they need to cool off the economy, but because like a bunch of poor credit people, they cannot borrow on the international market at the 0% rates anymore. Our debt is close to $20 trillion and going higher. Our debt to GDP level is matching the one from Greece and Spain. So the Federal Reserve now will be forced to take rates higher in order to be able to continue to feed Washington with their ever appetite for borrowed cash and others people's cash. So in any case, as you saw in the chart of Euro did exactly the reverse of what was expected. The market did exactly the opposite of what it was expected, with a big drop, and then of course they saved towards the end of the day. And also interestingly enough, you look at the chart of bonds, during the whole day that the ES was collapsing, bond was also collapsing. This is also a very unusual event because it is saying that market, no matter what the Federal Reserves are doing, is forcing rates to go higher. If rates are forced to go higher by the bond market, this will be another big challenge to the economic growth and the rise of the stock market moving forward. Now for crude, $38.50 has been tested 1, 2, 3, 4 times. Now it seems to be that 38.5 is a major level of resistance. If we continue to be unable to break that top, it's a matter of time that we should see a deflation of crude coming into the picture as well. This is exactly the same as the stock market. It's been going up not based on improvement of demand or anything like that, but just short-term manipulation and very much so short covering from the guys that shorted it from $60, $70, $80, which finally are closing positions right around $30. So we shall see what will take place moving forward. It's going to be very interesting. The market conditions are extremely difficult in my opinion, so exercise a lot of caution moving forward until things get back to normal. Have a wonderful evening and talk to you tomorrow.